So, today we're going to tackle a really big topic building wealth. But, we're not just going to throw a bunch of numbers and spreadsheets at you. No, this is more of a journey. It's a journey that starts inside your own head and ends with a clear, practical method for your money. Okay, let's get into it. All right, let's kick things off with this powerhouse idea from Morgan Housel. It just perfectly sets the stage for everything we're about to talk about. See, his whole point is that financial success isn't really about what you know, it's about how you act. It's not about being a genius with a PhD in economics. It's about having the discipline to stick with a plan. And that really brings us to the core question of this entire explainer, right? We're all taught to think of money as this pure math problem, with formulas and data. But what if that's wrong? What if the biggest factor in your success isn't the interest rate, but your own emotions, your own biases, your own history with money? That's what we're going to unpack. So that leads us perfectly into our first section, the inner game of wealth. Because before we can even begin to talk about how to invest, we absolutely have to understand the psychological stuff that all financial success is built on. Okay, so this is a really, really important distinction to make. Having a high income and actually being wealthy, totally different things. Income is what you make, and yeah, it's usually pretty easy to see. The fancy car, the big house. But wealth is what you keep. It's the money that you don't spend. It's working for you behind the scenes, totally invisible to the outside world. So you gotta ask, what's really behind the curtain, pulling the strings on our money decisions? It's almost never just a simple logical calculation. It's these hidden forces right here. That fear of missing out when a stock is soaring, or that greed for a quick win. Man, that can destroy even the most perfect plan. How you grew up hearing your parents talk about money, that can stick with you for your entire life. And we just don't talk enough about how much simple luck and risk play a part in all of this. All right, so now that we've kind of dug into the psychology of it all, let's switch gears from the why to the how. Because before you even think about picking a stock or an investment, you need a solid roadmap. This section is all about the absolute must-dos. I want you to think of these 3 steps as the concrete foundation of your financial house. If you try to build an investment portfolio without these in place, you're basically building on sand. You've got to know where you're going, you need to clear out the big obstacles, and you absolutely must have a safety net for when life, happens. First things first, you have to know your why. And I don't mean just having a vague idea in your head. I mean literally writing down what you are saving for. Is it a fundamental need, like a comfortable retirement? Is it a big want, like a down payment on a house? Or is it something bigger, for your kids or a cause you care about? When you put it on paper, it becomes real. It becomes your North Star. And that's what's going to keep you on track when the markets get shaky. Okay, let's talk about step 2, debt. If you're carrying around credit card debt with an interest rate like this, 15.99%, paying that off isn't just an expense. It's one of the best investments you can possibly make. Seriously, think about it. Wiping out that debt is like getting a guaranteed, totally risk-free 15.99% return on your money. Tell me, where else are you going to find a deal like that? Nowhere. And that brings us to the third piece of the foundation, your safety net. This emergency fund, about 3 to 6 months of what it costs you to live, is your financial shock absorber. This is the money that lets you handle a surprise car repair or, God forbid, a job loss, without having to raid your long-term investments or rack up more of that high-interest debt. It's crucial. Now, once that foundation is solid as a rock, it is time to bring in the single most powerful force in all of finance. Albert Einstein supposedly called it the 8th wonder of the world, the absolute magic of compounding. The idea itself is actually pretty simple, but the results are just mind-blowing. See, with simple interest, you only earn interest on the money you first put in. But with compound interest, you earn interest on your initial money and on all the interest that's been piling up. It's interest on your interest. It creates this incredible snowball effect that starts small but then grows faster and faster over time. And this table right here illustrates the power of time perfectly. Let's imagine Sipo. He starts investing 5,000 Rand every month when he's 25. Okay, after 5 years, he's got a nice $367,000. Not bad. But this is where the magic happens. Look at the acceleration. It takes him 15 years to hit 1.7 million, but then, over the next 25 years, his portfolio just explodes to over 17 million. That's compounding at work. The vast majority of his final wealth came from growth on his earlier growth. It's just incredible. And hey, here's a super handy little mental shortcut you can use to really feel the power of this. It's called the Rule of 72. All you do is take the number 72 and divide it by your expected annual interest rate. So if you think you'll get an 8% return, your money will double in about 9 years. If you're getting a 6% return, it'll take about 12 years. It's a simple back-of-the-napkin way to see just how fast your money can grow.
All right, so we've got the mindset down. You've built your solid foundation. You understand the incredible power of compounding. So what's next? Well, now it's time to actually put that money to work. Let's look at some of the actual tools and accounts you can use to get the job done. You know, not every dollar you invest has to be a home run swing. In fact, a really strong portfolio is built on a stable, low-risk foundation. Things like high-yield savings accounts, they're perfect for that emergency fund we talked about. Your money is safe, but it's earning more than it would in a regular checking account. And then you have government bonds. These are basically super safe loans you're making to the government. They're considered one of the safest bets on the planet. Now, for real long-term growth, you do have to be willing to take on a bit of calculated risk. This is where you find things like individual stocks. But hey, if you're not into picking single companies, you can buy something called an ETF, or an exchange-traded fund. Just think of it like a basket that holds hundreds of different stocks all at once. It gives you instant diversification. And you can do the same thing with real estate, by the way. Instead of buying a whole building, you can invest in a REIT, which is basically a company that owns and manages a portfolio of properties. And here's the best part. You do not have to be some kind of stock-picking wizard to do this well. There are amazing hands-off options out there. Retirement accounts like 401ks are designed for this. You can set up automatic investments and get great tax breaks. You could also use a robo-advisor, which is just an online service that builds and manages a whole portfolio for you. There are even specialized accounts for things like college savings. Okay, let's zoom out for a second. We've gone through the mindset, we've gone through the specific methods. But true wealth isn't built overnight. It's all about having the right strategy and, more importantly, the discipline to play the long game. Now, I know a chart like this can look a little intimidating at first, but honestly, the core idea is so simple, and it applies to everyone. It doesn't matter if you're starting with $100 or $100 million. The process is exactly the same. It's a loop. You plan, you put that plan into action, you monitor how it's doing, and you make little tweaks along the way. That cycle is the engine of growth. So in the end, success just boils down to having a structured, repeatable process. This is not about chasing some hot stock tip you heard from your cousin, right? It's not about trying to perfectly time the ups and downs of the market. Nobody can do that consistently. It's about having a plan that's based on your life goals, and then having the discipline to stick with it through thick and thin. And you know, this really brings us full circle. Why do any of this? Why bother saving and investing and staying disciplined for decades? It's for this. The real goal isn't just having a bigger number in your bank account. The true purpose of money, the real wealth, is freedom. The freedom to choose how you spend your time, the freedom to quit a job you hate, the freedom to live life completely on your own terms. That's the real return on investment.